Hi traders, in this video I'm going to take you through the triangle pattern, how to use them in your trading. But before we go through the pattern, I want you to let me know in the comment section what's your favorite chart pattern that you use on a consistent basis to be able to read the markets from a technical analysis point of view. One of my favorites is either the double bottom pattern or the head and shoulders pattern. Just shows me that there's a potential change in the current trend, and that what allows me to kind of judge the lower time frame and higher time frame opportunities. So what is the triangle pattern? Essentially, the triangle patterns are a form of technical analysis that can lead to trading opportunities within the markets. A triangle pattern that forms at a support and resistance level can lead to some continuation moves within the market, and traders can use them for breakout trading opportunities. So I've got two examples on the charts here of the bullish pattern or a bearish pattern. Now typically what you want to be looking for is for these to come into either areas of support and resistance, or you want them to be coming into areas after a kind of initial move in the markets. So I've got this situation here. Price has rallied significantly, formed a resistance point, then the market has pulled away, rallied back into it, found resistance again. But what you notice at this resistance level is the fact that the market is still creating higher lows. That is a fundamental part of this pattern. And the reason why that's a fundamental part of this pattern is because what it's telling us is that when the sellers are getting involved back in and around this resistance zone, they are finding less and less reward from that. Okay, they are being met by buyers back on the other side of that, and that's going to weigh down on these sellers. The sellers that are getting in at this resistance point, every time they're moving the market lower, buyers are coming in. Buyer steps back in, buyer steps back in, and what we're looking for essentially is what's the turning point where those sellers give up. Now in this case it'd be above these kind of highs in here, because that's where sellers know that they're wrong at that point, and that's why we get a large breakout move in the move here. So what you would particularly look for is the higher lows being formed at an area of resistance, and then look for that breakout opportunity. That breakout can provide further opportunities to see price trade to the upside. On the short side of things, you're looking for a opportunity to the downside, continuation. So in this example we have a large move to the downside. Price forms this base where the B is here. We make a move higher, we come back down, we retest that base, but notice at the highs this time they're continuing to get lower. That is traditional of a downward trend. A lot of people will see this base here and try and buy off of that base, thinking that the market is going to potentially turn here, but the difference is the highs are getting lower. If price had broken and made a new high, that is a different situation. That means that the market conditions are potentially changing at that point. Whereas we've got lower highs in here, the market breaks out of that lower high pattern, lower low, and the market continues to trade to the downside, offering us breakout trades in opportunities in this case. Going on to the strategy then. So how are you going to potentially benefit from a pattern like this? Well, when price makes a large move or it comes into a level of resistance, you're going to identify what's going on with the market. Now this is a current situation on gold. Okay, so this is actually a gold H4 chart, okay, as of today. Now the date today that I'm filming this is the 20th of June, and you can see here we've got a pattern forming. Price has come into a support level, okay, we've rallied away from support, so we've had the strong impulsive move. Price has found resistance, rallied again into resistance, price finds resistance, rally again, price finds a little bit of resistance, rally again. Are we going to say the same thing happen here now? Is the market going to break out? We've got an initial breakout here, but is the market going to close outside of this resistance zone? If it does, this could be an opportunity for gold prices to continue to trade higher. What are the conditions? Well, we've got the impulse phase. We've got the market making higher lows. That is an idea that these sellers that are getting active around this zone here are going to start to panic if they can't produce a new low. They're going to want to get out if buyers continue to push prices higher here. So what I'm looking for here in particular, or how I would particularly trade this from a strategy point of view, is I'd wait for a close above this level. I would look to buy on the breakout. Your stop loss goes below the previous swing low, so the last higher low, and then you look to target another area of resistance. If we just go back to those previous examples here and how we could potentially trade these patterns, here it was the breakout. You could look to sell here, stop loss above the recent swing high, and look to target on either a 1-to-1 basis, 1.5 maybe, or even a 2R trade, or look to target support and resistance areas. Here, for example, on the buy side, I'd be looking to long on the breakout close, and I'd be looking to put my stop loss below that swing low there, looking for a continuation up to a resistance point, or try and at least get a 1-to-1 risk to reward ratio out of this position. Hopefully that made sense. Hopefully you enjoyed this video. If you did, please leave it a thumbs up, subscribe to the YouTube channel if you are new. I look forward to speaking to you soon.